Hello everybody, welcome to the Daily Horizon View. The date today is the 15th of the 7th, 2019. We will be looking at the exchange traded funds top 5's on the ASX. The spotlight today is GEAR, that is the BetaShares Geared Australian Equities Fund. Stick around, that's an interesting little viewing exercise there, well worth hanging around. We are here to crack your financial sky. We want to give you information and demystify the world of finances. Okay, let's cast our peepers across the top 5 percentage rises for the day. We saw QAG, ETMPT, QCB, GDX, and QRN. Let's have a quick look at QAG, which is the BetaShares Agricultural ETF Currency Hedge Synthetic. That one has a market capitalization of roughly $3.2 million, so that is quite a small ETF. Today we saw a percentage rise of 2.74%, which equates to a rise of 16 cents. On pretty reasonable volume for such a small ETF, we saw 4,200 shares traded. Quickly follow up here, the top 5 percentage falls. We saw ETPMPM, IXJ, Drug, EMKT, and GEAR, which is our spotlight, so hang around for that one, well worth the time. So ETPMPM is the ETF's Physical Precious Metals Basket ETF, and that one is backed by physically allocated precious metals, which is held in the HSBC Bank in the US somewhere. That one has a market cap of roughly $7.8 million, so in relative terms, another smallish ETF. So we saw a fall of 1.89%, which equates to a loss of $2.99 on, I suppose, a reasonable volume for this smallish ETF of 2,900 shares traded. Okay, the top 5 percentage rises. What do we see today? We saw ETPMPT, IHVV, IHHY, GDX, and lastly here we saw IJR. I've kind of looked over similar ones to this, but ETPMPT is the ETF's physical Platinum ETF, and like its cousin that we mentioned before, it's backed by a physical allocated platinum held by HSBC Bank in the USA. Now, this one's a pretty small ETF as well, so market cap of $1.7 million. We saw a rise in the share price by $2.11, which equates to 1.89%. Get my shit together here with this one, and volume is quite light. I mean, this is a small ETF. We saw a volume of 830 shares traded. Top 5 dollar falls. We saw ETPMPM, ETPMPD, IXJ, IJP, and IVV. So we won't really spend too much time on ETPMPM, but just to say that is the ETF's Physical Precious Metals Basket. The numbers are all the same, the volume's the same. So we saw a fall in the share price of $2.99 today. So people getting out of precious metals and those type of investments. Top 5 number of trades, we are looking at probably the usual suspects. Yes, so VAS, VAP, BGS, IVV, and lastly here we're looking at STW. So VAS is the Vanguard Australia Shares Index ETF, and that one tracks the S&P ASX 300. Has a market cap of roughly $3.5 billion. You'll get a dividend in the vicinity of 4.45% for your trouble. And this one has a Morningstar rating of bronze. So that's effectively 3 stars out of 5 there, if you're looking at in the star rating. We saw a pretty healthy number of trades at 382 today. On the downside though, we saw a fall in the share price of 51 cents, which equates to 0.6%. Yeah, pretty much all the big ones there. Looks like people are getting out of those ones. So VAP, VGS, IVV, and STW, everyone's getting out. Saw some sharpish falls in the share price. Top 5 for volume. Let's have a look at what we can see. ETHI, IOZ, VAS, OZR, and lastly here we saw VAP. So ETHI is the BetaShares Global Sustainability Leaders ETF, and that one looks at the NASDAQ Future Global Sustainability Leaders Index. That one has a pretty healthy market cap here of $340 million or thereabouts. You'll have a pretty small dividend yield of 1.6%. Morningstar give this one a rating of neutral, which is effectively 2 out of 5 stars. Volume on this one, we saw 247,500 shares traded. On the downside, marginally here, we saw a fall in the share price of 4 cents or 0.46%. Top 5 for value, we're looking at VAP, VAS, A200, VGS, and AAA. So, you know, the market was pretty average today anyway. So looking at most share prices here on the downside, so falls in the share price. So VAP is the Vanguard Australia Property Securities Index ETF. This one has a market cap of roughly $1.4 billion or thereabouts. Dividend yield of roughly 8%, but that's changed recently in the last couple of days. I'll work out what's going on with that dividend yield. Still has a Morningstar rating of gold, which is 5 stars out of 5. We saw a value here of the total trades of $9.9 million. As mentioned before, looking at on the downside, loss in share price of 99 cents, which equates to roughly 1.06%. Okay, let's rip into our spotlight, which is GEAR BetaShares Geared Australian Equities Fund, and that's hedged fund. So the objective here is to provide investors with a simple way to obtain cost-effective geared exposure to the returns of the Australian share market. The fund is internally geared, meaning all gearing obligations are met by the fund, such that there is no possibility of margin calls for the investors. The fund combines, the fund combines funds received from investors with borrowed funds. It's a bit of a tongue twister. And invest the proceeds in a broadly diversified share portfolio consisting of the largest 200 securities in the ASX by market capitalisation. So effectively, it's a hedged variant of the ASX 200 index. So the fund's gearing ratio, so that's the total amount of expressed as a percentage of the total assets of the fund, will be managed between 50 and 65%. For me, there's a bit of a caution here. So gearing magnifies gains and magnifies your losses, and they may not be suitable for may not be a suitable strategy for all investors, I should say, to get my tongue untwisted. So we'll just go over a bit more of that type of stuff in the next slide anyway. Okay, let's take a quick look at some more of the numbers here. So net asset value as of close yesterday was 26.20. Trading just below that today at 25.91. We've got a market cap here of $79 million, so just over that. We've got a management cost here of 0.8%. You've got to remember this is a hedge fund. So distribution frequency should be semi-annually in January and July. We're looking at a dividend yield here of 4.53%. So GEAR allows investors to obtain magnified returns from the Australian share market as simply as buying any other share. If you're interested in gearing a small portion of your portfolio, this ETF offers a massive plus because there is no margin calls for the investor. It's all managed internally. The gearing obligations will be met by the fund with no further recourse to the investor. So that's, you know, if you're interested in this type of strategy, one less thing you have to worry about. The fund has a management fee lower than most geared fund alternatives in the market. So if you're looking at a normal manager, for a geared fund, it's going to be higher management costs. The fund manager uses its capacity as wholesale investor to borrow at a significantly lower interest rate than those available directly to individual investors. So I mean, that's one way they keep their costs down. There's not a lot of similar products on the market here. I'd be inclined not to look at something that's geared anyway. I'd do some further research on some of the other ASX 200 index funds. So I'd look at IOZ, A200 or STW. So let's have a quick look at the numbers here. So it's performed pretty well since inception on the 30th of April 2014. Your total return per annum is 11.04% because of the gearing. So look at the difference when you compare to the index return there since inception. You know, as I mentioned before, because it focuses on ASX 200, you're going to have all the top 200 companies in the portfolio. So Commonwealth Bank, BHP, Westpac, CSL, ANZ, NAB, Telstra, Woolworths, Wesfarmers, Macquarie Group, so all the usual suspects. I mean, I'm not a huge fan of gearing anyway. I mean, I always keep in mind the rule that Charlie Munger and Warren Buffett live by. The saying that those guys have is there is only three ways smart people can go broke. That's liquor, ladies, and leverage. So, you know, it's a little bit of a pun, but, you know, Warren always sort of says that there's no simple way of telling how far stocks could fall in a short period. Even if your borrowings are small and your positions are immediately threatened by a plunging market, your mind may well become rattled by scary headlines and breathless commentary. And an unsettled mind will not make good decisions effectively. So, you know, being involved with leverage products, to me, I don't see the massive gains. You know, for me, there's just a lot of negatives associated with those type of this type of product and leverage in general, and using leverage to invest. For the average investor, I don't think is a prudent strategy. This one's not for me. Hi guys, yes, this is our little standard disclaimer. I do not know your personal circumstances, and this is not financial advice. I'm not trying to promote any particular thing here. It's educational, and just showing you guys what's out there and what the possibilities are. So please take that into consideration. My mission is to crack your financial sky by demystifying the world of finances. We're here to give you information so you guys can do that. Give me a thumbs up, hit the subscribe, smash the bell so you know when all the videos are coming. Hopefully we're helping out with the information we're providing and at least giving you guys a little bit of encouragement to go out and have a look and take charge of your own financial world. Ciao.